Hello, hi everyone. I'm Hitesh Singla. So we'll talk about why did market fall on 7th of April 2024. It's an important thing so that everyone knows. So let's start the discussion. So let's look at the today's fall. Today, when the markets opened, it looked like it would be a mayhem. Sensex was did correct by 3.42%. Mid cap corrected by 3.6. Small cap corrected by 3.8, and Nifty Bank. Everything. All sectors were looking were negative, close negative in today, and. Uh, which was expected. I have written in my post to all the investors in yesterday's post that definitely on Monday we'll have a negative opening, and that's what happened in the market. Discussing about the reason is not unknown to everyone. The Trump reciprocal tariffs, which was applied on the 2nd of April, and date was for India it was 3rd of April when these tariffs were unveiled. But important thing to note is that India was tariffed at 26%, whereas the most of its neighbor were tariffed at much higher rates. China at 34%, Vietnam 46%, Taiwan 32%, Japan was lower, Thailand 36%, Cambodia, though not a neighbor, 49%, Indonesia 32%, Bangladesh 37%, um, Pakistan 29%, Sri Lanka 44%, Burma 44%. So India at least had a better edge as compared on the tariffs. So the impact on overall market scenario, we could see that as on today, the Dow Jones were negative by in the week's time was down by 9 to 11%. The European market was down by 11, 12 to 10 to 12%. The Asian markets also fell, where the Nikkei was down by 16%. When we saw it, we were looking at the today's morning, there was a lot of negativity around all these, where it was going down. Taiwan was down, Kospi market was down, Shanghai was down by 5%. So every market felt the impact of this tariff, and the major impact was seen in the US market. So, first economic data point to look into was the US 10-year Treasury bond yield. Starting the month of December to the January month, it was in the upswing move where the bond yields were hardening, and it reached to 4.8%. But after the his election, and since then, the bond yields are had been coming down. They've been softening, and today they are at 3.9%. There's a shift in the stance of all the things that were expected out of Trump's administration. Another data point where the US dollar was strengthening throughout the period from October onwards. It went till January, strengthening went to 110. Now it has started coming down. You can see the downfall. It is currently trading at 100 to 101 to 102. Brent, which was trading at $90 somewhere in the month of May, June, stayed high, started making a low in some last month, and today, if we're looking at, we are close to 64, $65 a barrel, which is good for Indian economy as such. So coming back to the Indian market, we could see that from September onward. Before that, the market was on a rising trend, and since September, it we saw that there was a market felt an overvaluation in the index. So that is the time when the valuation caused the outflow from the Indian market. The Indian market was seen as being very overvalued as compared to any other market in the world. So that was, and again coupled with the all the economic factors that I've shown you in the last previous slides, where we could see that the dollar was strengthening, the US bond yields was strengthening. So these all factors could were also contributing negatively to the market, and These led to the decline that we could see in the Indian market, which fell till till the month of March. We could see those, but now this trend is has started to was starting to reverse when the FIS money was returning to the Indian market. But the recent fall that you can see right now, this fall in the market, that is today's fall, which is a big fall for the economy, close to 5%. I think 5% fall in the markets is majorly driven by cause, not cause of the Indian factors. So this point is to be noted. This is not cause of the Indian market. This is cause uh, the markets in the US fell, and every market had a cascading effect of that market fall. So a lot of question that has been asked is, what now? How is the market looking now? What should we do? The first thing first is to look at how our GDP is affected by tariffs. So as such, Indian economy is not a very export oriented economy. Even of that, uh, US export is just a 2% of GDP. The other point to note that is we are a very import based economy, and cheap oil is very beneficial for us. So the cheap prices of oil always help add to our GDP number, because it's an expense for us. So in a GDP number, when you look at export minus import, so if the import price of the oil, which is a major import item for us, if that reduces, we gain from that. The GDP number gains from that. So this is a very good sign for an Indian economy. Second point to note is that tariffs on countries like China could be an opportunity, which can be converted into an opportunity where the tariff percentage, which is currently 26%, might go down or might stay at such for us. The major the tariffed countries where the tariffs is of higher percentage, we might gain that export component, might gain. So this could become an opportunity for us. Uh, Another thing to note is the Indian economy is not in a bad shape. We are growing at a 6 to 6.5% of growth rate, GDP growth rate. We are expecting this last year. The rate cuts are following in line in this year. The government is expenditure is there, which was stopped in the first 6 months of the last financial year and started somewhere in the month of December. So these all factors are still helping the economy to run at a good pace. We are not facing a very downturn in the terms of the GDP number. But there's a big but. Whenever US market would react, the other markets would react. This fall also was majorly led by the downfall in the US market, not cause anything had changed in the Indian market. We were witnessing a very good a kind of an uptick since the last in the last month of March. Uh, the other thing to notice, the US might now sit for negotiation with every country, and we might get some relief or not. We don't know, but this event wouldn't last much longer. This would end. A lot of people are saying this might take 6 months, 7 months, 8 months. Even I don't know how much it would take, but either the negotiation would end in some time, or we would be very much clear that how much is the what is the new normal. It would become a new normal for us, and then the markets would go into the same pace. Another, this slump might act. A lot of people are saying that this can be a very good investment opportunity for long term investors. Definitely it can be. It could. The Indian markets had bottom out, and again we are seeing the same bottom. Can there be a correction? Yes, there can be a correction. More correction is possible, but definitely any correction, any bottoming out is a definite opportunity for buying. When would it recover? Even I don't know. I can't say that it will recover in next 3 months, 6 months, but definitely it would recover at some later point in time. So things to check: keep your asset allocation in check. Look at how you are allocated. If the equity percentage is down, then allocate to equity. Definitely debt. Been saying for long time that debt does make a very good sense. Gold is a very is was a very good opportunity. I think gold might run up in sometime, and then that opportunity might be lost. Another thing too, we can avoid US based funds as of now. We can can wait and see how the US economy is actually progressing. I am of the view that there might be a slump in the US stock market for some time, even though their GDP and everything might be. They are not looking at growing the US stock market as of now. That is my personal view. That you can everyone can look and check with their advisor how they are looking into this. Again, stay away from mid and small cap if you're not investing for more than 10 years. If your horizon is very much limited, next 2 3 years, mid and small might not be able to give you the returns that you're looking at. Please increase your investment horizon if you're entering into a market. Flexi cap strategies, multi cap strategies, large cap based funds, large and mid cap based funds, they can make up a good size of your portfolio. Do not again do not stop your SIPs. Please continue your SIP. I had made a separate video already showing how the downturns can the downturns or the SIP long term averaging effects plays out in a long term. SIP a SIP instrument is a long term instrument, and then you can look at that video, you can check out that video. It shows you how the past has it has been. So that was all from my side. Hope you enjoyed the content and the video. Do share, subscribe, and like to my channel. And thank you.